And we indeed need to thank 283 for giving us this pair to trade for this week. As if you have taken advantage of this opportunity here, you will definitely be in a huge profit at this point. The first position is running with about 120 pips, and the second position is running with about 90 pips in profit, with a total of over 200 pips in profit. Now, what did we see here during the live session yesterday that made us take advantage of this trading opportunity? Well, I would like to scale up into the 4 hours time frame, as that was where we identified this triangle that gave us this consolidation phase that we saw here. So on the daily time frame, this is what we saw on the, let me start up from the daily time frame, then I will break it down to how we got into this current position. So on the daily time frame, this is what we saw here. In the last 4 months, price has been bearish, but the fact that we have been seeing multiple rejection around the 156.00 level was a beautiful sign that buyers might likely be coming in. And in fact, you can see the lowest point price was in the last 12 months thereabout is around the 152.00 level, and in the last couple of months price is yet to break down that structure, giving us a clue that buying momentum is gradually coming in. And when we zoom into what has been happening here since the month of December, we saw after this bearish impulsive move that brought price into this demand zone, we have seen a situation here that looks more like a reversal pattern. And you know, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify a neckline, which we shall definitely be using to guide trading activity. And lucky enough for us, we had a neckline situated at around the 162.00 level, and this was what we said we shall be using to guide trading activity. So we were looking forward to a breakout of that neckline to give us a confirmation that this reversal pattern is now mature. And in fact, this market structure we have here has a tendency of giving us a huge momentum. And in fact, I will be advising that we have a long-term perspective of a TP target sitting around the 165 level, which shares a confluence with that bearish trend line that has been guiding certain momentum here in the last 4 months. So what I'll be doing now is we scale down to a much lower time frame, as we wanted to anticipate the breakout of that structure. So what we did is to scale down to the lower time frame, and we looked at the 4 hours time frame, and this is what we saw on the 4 hours time frame. So we saw a triangle here which looks like a pennant, where price action was caught within a channel here since the beginning of this month. So we saw the situation here, we had a triangle here, and one thing I stated during the live session yesterday is that whenever we have such a channel like that, what we are going to be looking forward to is either a breakdown of that channel to give us an opportunity to sell, or a breakout of that channel to give us an opportunity to buy. And this is exactly what we saw here. Price action broke out of the structure around this area to give us a signal that we are going bullish on this one. And when I woke up this morning and looked at my chart that is on the 1 hour time frame, this is what I was able to identify here. I saw a situation where price was caught within a channel between the 161.500 level after breaking out of that trend line we identified on the 4 hours time frame. And I said, beautiful, if this bullish momentum continues here, I want to be buying above the 161.500, as this is a breakout retest of that trend line. And lo and behold, this is what happened. And I also identified a structure here at the 161.850 to add more position to my existing trade. And boom, after the S&P global publication, that is the CIPS, which came in with a whooping 53.4, a positive variance of 4.4, it was a good signal for the pound sterling to rise to the upside. And this is what we have seen here, a whooping 200 pips since the beginning of today. And if you have been part of this trade, well done to you guys for being on standby to catch this move. Now the next thing we want to be doing right now, if you are still in this trade, that is for those who are still running in this trade right now, I will be advising you to move your stop loss accordingly to secure this current position, and you might want to be putting your stop loss somewhere within the 162.400 and the 162.200 area to secure this current position as we continue to monitor price action. And I am of the opinion that price action still has a room of continuing to the upside. And one more thing I would like to state here is that please remember that the 162.00 level is the neckline of the reversal pattern we identified on the daily time frame, and there is a likelihood that price action has a tendency of dropping back into the trend line to retest that structure to incite another wave of bullish momentum. So if price action drops, we don't need to panic, as we still have a structure around the 162.00 level where we might likely see price drop into, resume with buy pressure around this area to begin the second wave of that bullish momentum. And in order to make our trading easy for us during the New York session today, I have identified a trend line here. As you can see here, since Thursday of last week's trading session, we have been seeing bullish momentum gradually coming in this market. And when we connect the series of higher lows here, what we can see here is that bullish trend line after connecting that series here. So this bullish trend line will continue to be our guide for more bullish opportunity in this market. So I will be extending this further into the future, and as you can see, it also shares a confluence with the 162.00 level. So let's see how price action plays out from this level. And if it so happens that price action does not drop to the downside here, that is, price does not drop to the downside, instead it continues to find higher highs, well, I would want us to look at what is happening here. Can we identify a trend continuation pattern around this area at the 162.800 level to join that trend continuation to the upside? So let's scale down to the 15 minutes time frame to see what is really going on here. So we do have a structure here already. So we have one around the 162.900 level, a strong psychological level that is. So we shall be identifying that level, and let us label it for the sake of clarity. So we have the 162.900 level there figured out at that point. Then we have a support level also sitting around this area, which, let me use my line chart here to figure things out. Okay, we really don't have a mature one yet, so I will suggest that let's give some room. So let's give some room here. So we have the 162.600. So let's figure that out and place it at the bottom right hand side of the screen. So we should be expecting a potential consolidation phase around this area, if the case may be. And if that happens, that is, price action consolidates within this area, then if a breakdown happens, then we might likely be seeing price dropping back into that structure we said earlier that will be giving us an opportunity to join another wave of bullish momentum. However, if that does not the case and instead price action breaks out of the 162.900 level, then the structure here will have transposed into a trend continuation pattern, and we could actually join a bullish momentum from above the 162.900 level. So let's be on standby for any of these opportunities as we continue to monitor price action. And it's on this note I will be calling it a day during the live session today.